timely information on fares before embarking on journeys. It said any fare adjustments must be transparently communicated and applied fairly, and notes that the complaints were coming and reports of reductions in the pump price of petrol in some parts of the country. Meanwhile, Executive Vice Chairman and Chief Executive Officer of the FCCPC, Tunji Bello, said the Commission is closely monitoring market conduct throughout the festive period. And President Bola Tinubu has presented a spending plan of 58.18 trillion naira to a joint session of the National Assembly for the 2026 fiscal year. He declared that all armed groups operating outside state authority would henceforth be treated as terrorists, promising tougher security actions, structural budget discipline, and deeper economic reforms. National Assembly correspondent Jokadisa has the story.
At exactly 2:59 p.m., President Bola Tinubu entered the venue of the joint sitting of the two chambers of the National Assembly, signaling the commencement of the budget presentation exercise. In his welcome remarks, President of the Senate, Godswill Akpabio, appreciates the timeliness of Mr. President as he speaks to the current security and economic challenges facing the country.
And it is important to place on record that the progress we are now witnessing under your administration, sir, has been achieved despite persistent skepticisms, relentless criticisms, and the loud objections of naysayers and traducers, who doubted both the necessity and the result of these reforms. These were difficult decisions, yet necessary ones, and they reflect a leadership willing to choose a long-term national interest over short-term benefits and comfort.
For more than 30 minutes, President Bola Tinubu held his audience spellbound as he spoke to the challenges of the past 2.5 years. He admitted the dismal performance of the 2025 budget and promised an end to operating multiple budgets.
This is a reset, a very hard one. Avoiding abandoned projects, unpaid contractual obligations, and running a multiple budget, both inherited and unfulfilled mandates. It's a problem staring the nation. So we are terminating the habit of running 3 budgets on one inflow.
Mr. President announced the components of the 2026 appropriation bill tagged Budget of Consolidation, Renewed Resilience, and Shared Prosperity. It speaks tough on non-state actors holding the country by the jugular. The president promised Nigerians that his administration will invest in security with clear accountability.
Today, I present a budget that consolidates our gains, strengthens our resilience, and takes this country from out of the dark tunnel of hopelessness, from the survivor to growth.
In a highlight of the budget presentation, defense and security got the largest share with 5.41 trillion naira, followed by infrastructure. Key aggregates of the budget include 34.33 trillion naira as expected to revenue, 15.25 trillion naira for debt service, recurrent non-debt of 15.25 trillion naira, and capital expenditure of 26.08 trillion naira.
This budget is therefore designed to provide a single coherent program of national renewal, a national security and peace building.
The Speaker, House of Representatives, appreciates the President for his yearly appearance in performance of a constitutional responsibility. He says security and economic challenges must be overcome to enhance citizens' quality of lives and property. The President promised Nigerians 2026 will be a year of stricter discipline in budget execution. The two chambers of the National Assembly will get busier in the new year as they ensure that the 2026 appropriation bill gets all the attention it deserves, such that it becomes law in record time. Joke Edsa, TVC News, Abuja.
Now let's talk this through by speaking with our guest who is joining us on Zoom. Is the Group Chief Executive Officer of Carry Asset Management Limited, Johnson Chukwu. Thank you so much for joining us, Mr. Chukwu. Good to see you. President Tinubu presented the 2026 budget as a budget of consolidation, highlighting improved macro indicators like inflation decline and rising reserves as evidence of stabilization. So given this backdrop, how do you assess the credibility and sustainability of these macroeconomic gains?
Well, thank you for having me, and compliments of the season. I think to gauge the sustainability of a budget or the possible effective implementation of a budget, you have to look at the basic budget assumptions. This budget is premised on a total revenue about 34.8 trillion naira, debt service about 15.5 trillion naira, capital expenditure budget about 26 trillion naira. But most importantly, is predicated on oil benchmark of $64.85 per barrel, and oil production about 1.84 million barrels a day. And I think that's where we should focus on. Because the projected revenue about 34.8 trillion is predicated on the fact that we're going to achieve the budgeted volume of 1.84 million barrels a day. And I think that's still, in as much as we have achieved some level of improvement in crude oil production, they're achieving an average daily, I repeat, daily crude oil production about 1.84 million barrels a day. Even when you add the condensate, still looks very optimistic in 2026. At the end of November 2025, our average production was less than 1.5 million barrels, for the month of November. And so you are going to ratchet up production by almost 300,000 barrels. We may see some improvement, certainly see some improvement, but I don't think we achieve that average. And that's the key thing. The other aspect is crude oil production, a price of $64.85 per barrel. I think given the outlook of the oil industry globally, that may also be optimistic. What this means is that if these two key assumptions are optimistic, then the revenue expectation of 34 trillion with 34.8 trillion naira may not be achieved. If it's not achieved, bear in mind that we had already made provision for a budget deficit of about 23.85 trillion naira. So it then means that we may have a wider budget deficit. And if you have a wider budget deficit, you're now left with not able to implement discretionary expenses. The discretionary expenses include things like infrastructure, things like capital budget about 26 trillion naira. So if you are not able to achieve your budget, that means you're going to borrow a lot more. Bear in mind that our debt service is already about 15.5 trillion naira. If you take out capital expenditure, the next largest expense item in the budget is debt service. So that's why I say, look, in as much as we've seen government improve on the wide assumption that underpin 2025 budget, I think we still need to be a lot more conservative in our estimations to achieve a fully implementable budget.
So looking at President Tinubu, he actually allocated over 5.4 trillion naira to defense and security and over 3 trillion naira each to education and infrastructure. In what way do you think these allocations align with long-term productivity boosts and human capital development?
Okay, let's start with the allocation to security, about 5.4 trillion naira. Today, the greatest challenge we have to the country's socio-political development is insecurity. And there's no amount that we are allocated to insecurity one would say it's excessive, it's even sufficient. So I think I must commend the fact that of all the items, security accounts for the largest amount of allocation. But what follows with that allocation is there must be value for money. The president must personally supervise how these amounts are spent. If you speak to people in the security apparatus of the country, they will tell you that they don't think that we're getting value for the amount we have allocated repeatedly for security. And if you don't get value, then you are just wasting money. And then probably that money is finding its ways into private pockets. So the president must take it, if he has to assume the role of a substantive minister of defense, because it's the most critical thing we have to deal with. Then as it relates to infrastructure, about 3.54 trillion naira, if you take out insecurity, the next big elephant in the room is infrastructure deficit. And then you talk of education, because the reality is that education, for me, is actually the biggest infrastructure that a country with a population of 220 to 230 million people need to invest in. Because if we have this large youthful population and they are well educated, well equipped with modern skills, then we could actually begin to dominate the world. Look at what's happening in India today. A lot of companies in the IT world are outsourcing to India. So that's where we should be. Look at what China is doing. The advancement China has attained with technology. And it's only possible with level of education, quality of education, and the universal nature of higher education. So I think those allocations, in principle, are very value-oriented. The key thing is get value for money.
One thing is to talk about the education, and another thing is to talk about what people get after they are educated. Because despite improved indicators, unemployment and underemployment remain concerns. Is the economy growing fast enough to absorb Nigeria's expanding workforce, do you think?
Well, if you say, if you want to use common logic, you say like economy growing about 4.23%, may not be creating enough jobs. I think that was the second quarter growth. Third quarter growth came out below that at about, I think, 3.98%. One would say that we're not growing fast enough, but it goes beyond that. The most important thing is the curriculum must be appropriate for the society, for the job opportunities in that environment. Today, if we focus on smart STEM education, which is science, technology, engineering, and mathematics, we will have people who will sit in the comfort of their homes in Maiduguri, in Yola, in Lagos, in Ibadan, and work for multinational IT firms globally. All we just need is support it with broadband and internet infrastructure so that people can work remotely from anywhere. And then you will even see people, a company that are IT focused, coming to Nigeria to set up operations and recruit those skills we have developed. So the key thing is not just about are the jobs available. The question is that are we creating the qualities and competencies that are required for today's world? And if we do that, the jobs will materialize. If you are churning out people who read history, literature, theater arts, and then you must realize that for you to create jobs for them, you must develop this industry that they are attractive to them. And the next thing is we need to also do the heavy lifting as it relates to basic industries that are labor intensive, the manufacturing sector. For a country with a large population, you must have a strong manufacturing base. That also helps in job creation. But I think the first thing to start is that the curriculum of our educational system needs to be reviewed and make them to be attuned with today's global labor needs.
So speaking of town and the gown, not closely related with, not really related to what they churn out. There's one thing you get in school, another thing you find when you get to the labor market. But then let's change tack by looking at the projected deficit, which is 23.85 trillion naira, and that's more than 4% of the GDP, with debt servicing consuming a significant chunk of the budget. Is this level of deficit and debt servicing sustainable in the medium term, especially given Nigeria's global debt profile and historical fiscal pressures? Do you perceive any risk?
You know, when I spoke earlier, I said, look, we need to be conscious of the fact that our projections are not overly optimistic, but when they do, they will compel us to borrow more. If we borrow more, we'll further worsen our debt service obligations. Today, we have budgeting to have a deficit of 23.85 trillion naira. What that means is we tend, all things being equal, we achieve our revenue projections, we tend to borrow 23.85 trillion naira. That will add to about over 154 trillion naira of a current existing budget debt. So if you add another 23 trillion, national debt, if you add another 23 trillion to that, you're going to something close to 180 trillion naira in terms of our debt. So the debt service will further increase beyond the 115.52 trillion naira we are budgeting for this year. And clearly, if you continue in that trajectory, you're going to crowd out a critical investment that the government needs to do with the budget. And that's why I said, look, we need to be very circumspect. And when we cut the budget expectations to ensure that we do not worsen our borrowing, compelled borrowing. Bear in mind, like I said, debt service is obligatory, so 15.52 trillion naira must be spent. Another 15 trillion naira, which is about non-debt service obligations, is already also compulsory. So if you add the two of them alone, you have over 30 trillion naira of the 38 trillion naira, 34 trillion naira you want to raise. So in effect, what is left after what you call non-discretionary expenses, that is, you don't have the discretion to say I must incur it, I will not incur it. What is left is only 4 trillion naira. So it then means that clearly, if you have any shortfall in your revenue projection, your revenue, you are also going to borrow money to pay non-discretionary expenses, non-debt service obligations, debt service obligations, which two of them sum up to more than 30 trillion naira. It's about 31 trillion naira between the two of them. You have about just 3 trillion naira that is available, that is not going to be borrowed to incur other costs. So that's why I say that the problem with debt service, if you continue to accumulate debt, is that you crowd out the resources that are available for infrastructure. We have made a budget of 5.6 or so trillion naira for debt for security.
So
it then means that
5.4 trillion
part
naira.
of that amount will be 5.4 trillion. It simply means part of that will be borrowed, because if you consider the fact you're only left with 3 trillion naira, 3.5 trillion naira after non-discretionary expenses. So we have to borrow to fund security. So which means if we're not able to borrow, we will not fund that security. See why the problem is. You have to fund infrastructure about 3.56 trillion naira. If you are not able to raise that, you are not able to cure that. If you do not have money, you will not spend about 3.5 trillion naira that is going into education. So that's why we have to, government must be conscious of the fact that we are getting to a point where the debt burden will begin to hurt the critical needs of the country.
As you said, that's a big elephant in the room, and then it's a proposal, and all you can say is that the devil is in the detail. So we see how that is going to be, implemented at the end of the day. But let's revisit the issue of oil benchmark, which is at $64.85. Talk about the budget revenue assumptions relying on an oil benchmark. So given volatility, because by the time you look at the production of 1.84 million barrels per day, and then given the volatile global oil market and Nigeria's historical production shortfalls, how realistic do you think these assumptions are?
I said earlier that for us to, if you even look at our current production, which is the starting point, like I said, we've seen some improvement, but we are still in the region of 1.5 million barrels a day. Yeah. And to produce 300,000 barrels, additional barrels a day in a single year, is going to be a tall order. Remember the oscillations in our production. You have shut in here and there. Yes, there's some improvement in security around the oil industry. But then you cannot rule out shutting. So the possibility that we will have incremental production about 300,000 barrels a day within the next 12 months is a tough call. So that means that our projected volume is quite optimistic. The second aspect is the projected crude price. You are talking of crude price about $54.84 a barrel. Today, crude in the last 1 month has been trading below $62, $60, and region of $60, less than $60. And it's expected that should Russia reach some level of agreement to stop the war with Ukraine, that crude prices, or Russian crude, will come back to the market formally, and crude prices will drop further. We are seeing a slowdown in productive activities in countries like China, that's the second biggest economy in the world. And we also see the slowdown in productive activities or GDP growth in European countries. Should that continue, it simply means that you're going to have a slower demand, a reduced demand for crude and other input materials. And that will impact further on crude prices. And then we also have to contend with the fact whether OPEC can continue to hold together as the days go by with what the U.S. is doing. So everything is pointing to the fact that we're going to see crude price below $60 in the coming year. So if we have a budget of 64.84 per barrel. It also simply means we have an optimistic projection. So you can't afford to have negative price variance and negative volume variance. Both of them will impact negatively on the revenue, and that could cascade across every other budgetary item.
And what would imagine how this is going to even be achievable with the challenges the like of a Dangote refinery is also facing, with the regulatory agency. The president has taken some actions, but I do not know what this is going to mean like, what this actually means for investors. Do you think that's fracas or forth and back with between Dangote and the regulatory agency? Do you think it would probably boost investors' confidence? Looking at the president wading in.
Well, the Dangote issue is a slightly different issue from the budget opportunities or the prospect of Nigeria achieving its budgetary revenue. The simple reason is that the timeline for investors to make a decision to invest in an economy, particularly foreign investors, is longer than 1 year. It's always, for foreign direct investments, not normally more than a year decision. The first thing is that we have to make our investment climate attractive, not just to a Dangote, not just to local investors, but to everybody, not just foreign investors, but even to local investors. Those factors go beyond the spat that the Aliko Dangote had with the MD of
NMDPR.
Midstream and Downstream Petroleum Regulatory Agency. Yes, it goes beyond that. We have to look at what are those things that make our environment unattractive to foreign direct investors. We have talked extensively about insecurity. Where you have insecurity, nobody will come. That's right. That has become the big elephant. Then you have to do with infrastructure. You have to do with the issue of policy. You have to do with our fiscal policies, including, you have to do with industrial policies. You have to do with the trade policies. Then you have to do with the fiscal policies, including the tax law. That today we're implementing, from 1st of January, we're implementing a new tax law. Investors will also want to see how that plays out, how that fits into their own expectations in an investment destination. So too many factors still have to be considered. But the key thing is that you can't build a budget based on the fact that you expect foreign direct investors to come in. They don't come in within a year. They take a time to study the industries, to take their final investment decision, and before they see a release of funds. So we should focus on what is achievable. Remember that the budget is always a short-term economic plan. Your government government don't normally have a medium-term economic plan. The government will also ordinarily have a long-term development plan. It's a long-term development plan that industrialists, foreign direct investors look at, because they're saying, if I start to do a factory today, it could take me 3-5 years to finish the setup. What would be the economic environment in 5 years' time? Not what would be the environment in 1 year's time.
Yeah, we see what happens, especially with the tax laws that you mentioned. Only God knows whether it's going to take off, by January the 1st, looking at the, kickbacks, from the National Assembly. But let's, I understand that this is a convenient point for us to leave it. I would have loved to get your opinion regarding the student loan, with an education trust fund, but then if you can do this, in less than in about a minute, if you look at over 418,000 students, they have access to loans through the education loan fund. How sustainable do you consider this model, and how will repayment avoid becoming another student debt crisis? Very quickly, if you can.
I think it will be difficult for the students who are getting this loan to escape payment once they have jobs, because we have a improvement identity management system today. That has improved. The BVN has made it difficult for people to escape debt obligations. So I think the key thing is to create an economic environment where, when they graduate, they will have jobs, and those jobs will afford them enough income to pay those loans conveniently. So I don't think that should be a concern for anybody today, given that the era of identity management difficulties have largely passed. But the key thing is that it creates good opportunity, ample opportunity for those whose families are not able to fund their education to actually have access to education. But the next thing is that I mentioned earlier, we must have a curriculum that fits into the future job opportunities these young people.
It remains to be seen how the National Assembly will definitely go about the proposed budget. But then, in the meantime, we leave it here. The Group Chief Executive Officer of Kari Asset Management Limited, Johnson Chukwu, thank you so much for your keenness of insight. Thank you.
Thank you for having me.